I'm Charles Payne, and you're watching Making Money. It was a record day on Wall Street. The Dow trades above 18,000 for the first time this year. The S&P is at an all-time new record high, and Nasdaq's at a 15-year high. And don't forget about the Russell 2000. All those low-cap stocks, they're at a new all-time high. So where do we go from here? Well, we're going to also take a look from the bears' perspective. But first, let's go to Adam Shapiro on the floor of the New York Stock Exchange with the details. Hey, Adam.
Plenty of records were busted today, Charles, and let's go through it piece by piece. First, the Dow, not a record, but we closed for the first time above 18,000, 18,019, but it's the S&P 500. This is a record close, 2,096. Also, the Russell 2000, keep an eye on that because it closed record territory today, 1223, and the Russell 2000 corresponds with the U.S. economy, so people see that as a real positive sign. Nasdaq was up 36 points today, not a record close, but still up for the week as well. Now, did you hear about J.M. Smucker? J.M. Smuckers was up today. They hit a new high during trading, and part of this has to do with the fact that they own Folgers Coffee. Well, last year they raised the price of coffee. They announced today they're going to have smaller cans of coffee to help consumers who don't want to spend as much. Plus, it's starting to rain in Brazil where they grow the coffee beans. Bottom line, good news for coffee, good news for J.M. Smuckers. With a name like Smuckers, it's got to be good, right? Back to you, Charles.
Hey, thanks a lot, Adam. Really appreciate it. All right, guys, an all-star week, an all-star panel. Here to help us out, our pros, Paul Dietrich, Fairfax Global CEO and Chief Investment Officer. Jim Awad from, Jim, what's the name of your firm?
Plimsoll Capital.
You've been around, though, for such a long time. I mean, we're going to really lean on your heart, but what are you making in this market real quick?
Well, it's very logical today. You had a Ukraine truce. Greek negotiations haven't broken down. Oil is up. Treasuries are stable, and the news out of the U.S. is good enough.
I didn't even think about the geopolitical stuff today. Speaking of which, Anthony Scaramucci, Skybridge Capital founder and the hottest restaurateur in New York City right now. Can't wait to go to his new place, but first we got to pick his brain. Hillary Kramer, CIO and president of A&G Capital. She's with us looking smashing. And, of course, Matt McCall with the matching tie, founder and president of Payne Financial. All right, guys, it was a huge, huge week because even though the markets weren't up a lot, we had this, again, I think today was a perfect example. We had sort of this seesaw where we're trying to find our footing. And even today, at one point, the markets were fading. That oil rig count came out. And what happened? The stocks pulled back. I mean, it was another bad week for the oil patch. 98 rigs were removed. That's a huge, huge move in the oil patch. This oil started coming down. The major indices started coming down. And for a small moment, we were in the red. But just like yesterday, the market got stronger as we headed into the closing bell. And I got to tell you, it's even more impressive today because we're heading into a 3-day weekend. I personally think this market is poised for a much, much bigger move. I'm going to ask you, Paul, what do you make of the session?
Well, I think investors have to distinguish between the underlying economy and the stock market. The underlying economy is doing quite well. We've had 1 million jobs in the created in the last few months. Earnings are good. Europe is seeming to come back. China and Asia is starting to pick up.
I got to just say, when you were setting that up, I thought you were going to say the exact opposite. I thought you were going to say the underlying economy kind of sucks and the market is up. Really?
Yeah, the underlying economy is doing well. The problem is the market overvalued?
All right, well, what do you think, Anthony?
So that's what makes a market, because I think the underlying economy actually is frayed. We've got a tale of two cities, great corporate economy, but a dismal middle-income economy. And so if we can't connect those two, I think we're going to have some tailwinds.
Where's the onus to connect those two? How do they become connected?
Well, you got to get corporate tax reform, possibly individual tax reform, a repatriation deal. And I think if you get those combination of things, you'll start to see a resurgence in growth. Remember, we've got several $1 trillion of cash on the balance sheet of the S&P 500. Unleash that cash, you're going to spur growth like we've never seen in the United States.
Well, can I go right in the middle?
Get in there.
Paul and Anthony, I'm going to drop right in the middle. Great, not good. I think the economy's okay, and that is perfect for me because it's not good enough.
He's the mama bear on the side.
It's not good enough for the Fed to make a move yet. But it's not bad enough to be troublesome in my mind. And as long as it stays easy peasy, however they say, the market's going to keep going up.
Yeah, all right, so we've set it up already, right? We got the Goldilocks scenario, right? Okay, Goldilocks, tell us the answer.
the technicals, and I'm not usually a technical analyst, but the technicals look good. It goes to what Matt's saying. The market is poised to move higher, and it was just a beautiful close, especially considering we have a 3-day weekend. The market usually wants to sell off and position itself for bombs to go off in the Ukraine or for Greece to default, but the fact that we finished at such a high, everyone should be excited about that.
Yeah, I think there's a lot of money on the sideline, too, and it feels like the train is leaving the station. And some of these guys who are just paid to perform, they can't overthink this, because I think they've been overthinking it for a long time. Hey, all right, let's blow the whistle, open up the first page from Payne's Investment Playbook. Let's do this. Let's do what Hillary said. Let's take a look from the market from a technical point of view, because it's pretty clear that the major indices, they've been in a very narrow trading range all year long, and of course that never lasts very long. And why do I think charts are important? Well, for me, I think they're pretty good gauges, really great gauges at some point for investor sentiment. Not the kind of sentiment where people go out with clipboards, but sentiment for people who are actually in the market, who have skin in the game. It's the most basic form of buy signals and sell signals. Take a look at this. We've got the S&P chart up here. Now, this is a longer-term S&P chart. Look at those two peaks early. That's a double top, always a bearish sign. We pulled back, but when we broke out of that, we have been on a massive rally ever since. And it all brings us back to the real deal. I want to talk a little bit more maybe about charts, what the ranges say, what this breakout says. Also, what do we know or think at least, Matt, with the people who are on the sideline? Because we talked about trillions of dollars waiting to get into this market.
Well, I started my career doing charts, and that chart you just showed is a major buy signal. If you go back to 1920, about every 15, 16 years, you go up, sideways, up, sideways. We went sideways for 12 years, broke out about 2 years ago. That was a major breakout. People kept saying, well, it's too high, it's overvalued. But technically speaking, you have the consolidation because buyers and sellers, they're kind of going like this, and eventually somebody wins. And a lot of times the bulls win, the bulls won, but the people on the sidelines with trillions of dollars, they're looking at it, and now they're saying, wow, we're running up, and they're going to chase it. But when I see all that money coming off the sidelines, that's when I start liking
Tim,
my
I mean, the train leaving the station. Are you starting to feel that? And it's got to put pressure on a lot of these hedge fund guys who've underperformed.
The hedge funds have absolutely underperformed, and we are in the easy peasy kind of period where the economy is growing fast enough for profits to grow, but not so fast as to create dislocations with the Fed and interest rates. But I don't think that investors have been sitting it out. They've been taking money out of active funds and putting them into ETFs. So I think the average investor is there. It's the hedge funds who have the performance issue here. Because
I want to get back to what you said, Anthony. We've had an amazing stock market rally under a president who is decidedly unbusiness or not business friendly, not friendly to capitalism, not friendly to the profit motive or success. How do we reconcile those two, and can we get another 2 years like this?
I mean, but he doesn't control the Federal Reserve. And so when the Federal Reserve jammed down the rates, they are the direct causal relationship for the stock market's rise. Had nothing to do with the Obama administration.
But then that means we can just keep going.
The Obama administration has frayed the social fabric of the society. They've made the middle-income people and the lower middle-income people suffer because these left-leaning policies always hurt the people that they're supposed to help. And that's the big issue.
What do you think, Paul?
I agree 100% with him. And but I don't believe
he's moving over to the Papa Bear. Come on over here, Papa.
Don't let the long flowing hair fool you, my man.
No. I agree 100%. And I think that's I think with the Republican Congress, he's going to be.
I've been a little disappointed so far with the Republican Congress. They've been pretty meek with, but listen, maybe the street doesn't care. Maybe they just want what they call gridlock. Nothing new comes out of except a few executive orders, some executive memos, if it can just be business as usual. But do you sense then, Paul, that this market can go higher no matter what?
Yeah, and with Congress doing nothing, I actually feel better every day when they don't do anything to harm me. And I think that's how most businessmen look at this. They've been harmed for the last few years.
We're going to have our 1981-82 moment here shortly. The next president, which hopefully be a Republican one, but the next president is going to be a very successful one because you're going to see regulatory reform, tax reform, and you're going to unleash the trillions of dollars of pent-up investment capital. So next president going to be super, super successful investment cycle growing.
I agree with you completely. We are in this 2.5% growth range. To get to the 3 to 4% range, you need the reform and the political reform that we're talking about.
Well, I don't disagree, guys, and I personally hope it's a governor, and I think you like a certain governor. We're going to talk about that later in this show, guys. Right now, though, It's Valentine's Day this weekend, and well, we all know what it takes to mend a broken heart. For guys, it's a lot of money, that's for sure. But how do you fix a big business and a big stock that's broken? We're going to tell you about it next because this formula is making a lot of people money, and we got some names that we think will do the same for you. All right, guys, let's blow that whistle again, open up another page from Payne's Investment Playbook. So how do you fix a broken stock, right? How do you find a way for it to come back strong? Well, these days, the broken company stock goes on a shopping spree. And I got to tell you, years ago, after a company hit a rough patch, they would often just sort of become instant takeover targets. Now, it's the exact opposite. Give you an example. Less than a week after this shares completely collapsed, Expedia recovered all that lost ground when they announced an all-cash $1.3 billion deal to take over their rival Orbitz. Look at that move. 15% in the last 24 hours. On Wednesday, Yelp, they played the same card. They announced its acquisition of Eat24, $75 million in cash, $1.4 million in common stock. You can see that stock's made a real nice move off the bottom right there. And then also on Wednesday, Rite Aid, they bought Envision, $2 billion deal. They want to get back into that pharmacy benefits business. They gave it up back in 2001 when they had a lot of trouble. Rite Aid used mostly cash, $1.8 billion in cash, the rest in shares. Look at that huge move. And I didn't get back in on weakness. I was watching it. And, of course, President Obama's favorite office supply store, Staples. This stock has been soaring since they started to whisper word of a possible merger with Office Depot back here. Finally, that came true. And what we have, here's a rub. We've actually got a roll-up now of 3 of the former top players because you got to include Office Max in here. So what's the message here, and how do we now find a broken name looking to return to former glory via acquisitions? All right, guys, there's a lot of beaten down names out there, but they do have cash, and maybe they'll put it to work. So let's talk about the next real deal here. I got to tell you, I was really shocked and at the same time very impressed on how much these stocks came back on this news. Why is Wall Street so receptive now? What's changed right now? You know, the idea that maybe it's just that these companies are putting money to work because it's a buyback, dividend, or acquisitions. Jim, you've been around for a while. Have you seen this period before where these companies that were sort of broken had big problems? Staples was at a double bottom ready to go to new lows. Right. All of a sudden, they come back all the way back.
Not as fast as this. This is faster than I've ever seen it because technology is disrupting the business models of so many companies so quickly, and information is traveling so fast that you can have a company that's a winner 1 year, and 2 years later, its business model is completely dead. You had a period like this in the early 80s with the takeovers, but that was mostly financial engineering. This is the real deal where entire business models are changing.
And Hillary, right. I mean, what do you make of it? Because, I mean, again, I'm sort of in awe when some of these deals that have been announced. By the way, after the close, Zillow missed the earnings, but they say the Trulia deal goes through. Stock is soaring.
Well, I'm an activist investor in mergers and acquisitions, so I look very carefully for companies that are going to be acquired or that are ripe for being acquired.
But I'm talking about the acquiree.
I know, exactly, and that's what's so fascinating here, what I love, because Jim's point is that we used to see these financial deals. Now we're seeing what we call strategic deals. So, for example, I love a company, Oracle. I've always loved Oracle. Larry Ellison founded Oracle, ORCL. Oracle could really benefit and could come back to its glory if they were to go out there and acquire companies that are in the cloud-based and
they've made a lot of acquisitions. But,
but as they keep doing it, and maybe with Mark Hurd, Software Cats,
right.
maybe now the management can really regain Oracle to the place
There's
where
a lot of cheap money floating around out there. A lot of companies are sitting on cash, as Anthony mentioned earlier, and just create synergies. And then you have companies that are looking to buy growth. Their growth is slowing, so they go out and they buy the growth. I think there's going to be a lot more of this going on in next year.
But there's 2 other factors. One, the Dodd-Frank legislation. There's 90 pages of it that make it easier for investors to take minority stakes and have a big voice. So you're going to see a lot of that happening to activize things. Last point, no corporate tax reform. Now, they've done some things to blunt the inversions, Charles, but they haven't done enough, and you're going to see a lot of tax deals coming over the back half of this year.
Now, Paul, we saw a lot of industries now. With this Expedia deal narrows down the travel agents to like 2 or 3 maybe. We saw this with the airlines, right? And there was a time I would never invest in an airline outside of a day trade. But now that they've shrunken them to 4, they parked half the fleet, they make money easily. Is there something that's unseemly about this or worrisome with respect to a lack of competition?
Hey, the dirty little secret in Wall Street is that we all like capitalism and competition in theory. But if you're an executive with a lot of money and you see an opportunity or a weakness in your opponent, you're going to go after them, and that's what's happening.
All right, and we like it when it's easy, right? If you don't have to really go through 20 airlines and there's only 4, it's harder. It's not too hard to make money.
The airlines became FedEx. They're just carting people now instead of packages. You're down to DHL,
yeah, but
FedEx,
now they have
UPS.
pricing power they didn't have before because there's no competition.
People are now packages. You're down
All right, so
to
let's talk about it then, guys. Let's go to the next real deal. Let's talk about maybe the next beaten down stock that roars back through mergers. Now, I'll start with mine. IBM, sitting on a ton of cash. I mean, get rid of the junk that's not working. You make a couple of the right acquisitions in that cloud space, and I think this stock goes to $130. Matt, what is some more names?
So I looked for a beat. Now, the sector I like with mergers is pharmaceuticals and biotech. So GlaxoSmithKline, GSK, a little bit beaten down in the sector. Ton of cash sitting on the sidelines. I think you're going to see a lot of mergers. And if you just want to hold and wait for it to do something, you get a 6% dividend while you just sit and wait.
Yeah, and there's no doubt at some point that's an industry that's, they'll take over some big-time biotech. Yep. You might get a twofer if you're lucky.
I think one of the smartest merger and acquisition trends is being taken by AT&T and Verizon. They're buying up really profitable cell phone companies in Latin America and emerging markets. And all these companies are really profitable, but the markets are generally down in emerging markets. They're getting a cheap way to buy spectrum and very profitable companies and become a global.
So you like AT&T and Verizon in that particular case?
Yes. They just bought Nextel Mexico, AT&T did.
Well, we've got huge assets in the healthcare sector. We think there's going to be major consolidation, hospital consolidation, pharmaceutical consolidation, pharmacy consolidation, and the one stock we love, and it looks great technically, is CVS.
Yeah, that's my favorite U.S.-centric. 100% of sales here in the U.S.
Interestingly, one of the biggest hedge fund guys in the street after the bell just announced that either he sold all or most of his CVS. We're going to talk about that later. I want to see you take on one of your compadres, if you will. All right, give us one, Jim.
All right, so unfortunately, the poor people and the lower middle class in this country are not doing well. So I think retailers and restaurants that cater to those people are ripe for consolidation and acquisition, as are commodities, energy, and because those prices are under so much trouble. So those are good fishing grounds for mergers and acquisitions.
That's a pretty wide net, though, right? I mean,
yeah, well, because we're not allowed to.
Okay, I got you. But you like that?
You can take that, do the screens, right. It'll take you right to the stocks.
Okay, all right. I like that. Like Indiana Jones, I'm giving you the map, kid. Just follow it. All right, thanks a lot. All right, so how do you know when you've got a stinker of a stock in your portfolio? Coming up, my investment lessons on what to look for. You probably know it, but you got to acknowledge it. You don't want to miss it because sometimes you got to take the losers out to make the money. We'll be back in 3 minutes to help you do it. So on Tuesday, the U.S. Patent and Trademark Office issued patent number 8,950,238 to Google. Now, this is the device, right? And some are calling it the stink blaster. Okay? It's, in this up-and-coming age of wearables, this baby will let you know if you have body odor, but it goes a step further. It also will steer you away from your friends. I mean, pretty neat device. A couple of people on the panel need it every now and then. No, I'm just joking, Matt. Anyway, listen, what if you had a stink blaster for your portfolio? When would it actually alert you to stay clear and get out? Well, one thing I'm talking about, when you're in a business and the company has reduced or lowered pricing power, they're selling things at a discount, that's a big problem. When you see that, obviously, it'll also be reflected in lost market share. When they lose market share, of course, you're going to start talking about multiple earnings warnings. Usually, if I see one in a year, you may see one within the next calendar year. Massive inventory builds always seems to bother me. And this is a big one for a lot of people, because a lot of people look at the income statement, but unsustainable debt. You want to look at some of the other filings. All right, let's go ask the panel what they think about the stink blaster and, of course, some of the warning things. What are some of the things that almost instantaneously make you want to sell a stock, Hillary?
Technological obsolescence. As soon as something like that happens, then you want to be out of it. And of course, just increased competition.
What does that mean?
Obsolescence, that would be like AOL, right? Once the walled garden of AOL didn't matter anymore with dial-up, and you didn't need to dial up, then AOL was obsolescent.
Now, it's interesting, though, to your point, AOL stock held in there pretty good until this week.
Right. Well, but AOL years ago, right?
Sure.
AOL bought Time Warner with Time Warner's money. So talk about.
Well, that was a brilliant move. That's something altogether different.
First of all, I put on cologne every day before the show to brush my teeth, so I don't want to hear it. It's not
like
me.
the cologne.
It's not me. This hides it. Well, I look at two things. I look at the technicals and the fundamentals. Technically, if it breaks that long-term uptrend, there's something wrong. I may be wrong. I get out of the stock. And then fundamentally, if the catalyst for why I bought it has changed, I will then get out of the stock as well.
Yeah, we had someone just tweeted right before the hit, said you want to sell when the stock breaks down technically. A lot of people use the charts. What do you use, Paul?
You know, I basically, the stocks that you don't want to buy, you want high PEs, you want low returns on equity, you want low cash flow and lots of debt. Those are the things to stay away from.
Those are the things you avoid. But if you're already in it and those things start to happen, then that's a yellow red flag.
Yeah, if those things start moving down, you get out.
Take a little different take from everybody and talk a little bit more macro. The environment we're in now is more macro driven, and so when things are wrong on the macro side, as an example, there's a sclerosis going on in Europe. There's very, very little growth. So for us, we're going to avoid all the European stocks as a result of that. It doesn't even matter to the sector.
Yeah, but that can be very narrowing. Like, so for example, we've talked about European stocks here. I've talked about Sanofi, SNY. So you have these companies in Europe that are just incredibly great opportunities because so much of their business is outside of Europe. To me, Europe is where there is
And then there's also the contrarian thing where, you know, everyone kind of knows that the sick man in Europe is all of Europe, and that maybe these stocks are already oversold based on that. But I get your point. I'd rather go your route than for the average investor.
When we start to see the dashboard moving for greater growth in Europe, those types of names are the ones we'd like to jump into.
And no doubt about it. All right, guys, there's so many people talking about this, right? Missing out on this rally. Listen, we know there's always going to be downside risk, but the panel and I, we're going to tell you why being too cynical has already cost you a lot of money and could cost you a lot more. I know it's ugly out there. Stick around because we still want to make you money. All right, guys, we ended the week at all-time high, so invariably people start talking about the risk, right? So let's talk about the downside risk and really also the quality of this rally, because there are a whole lot of non-believers out there right now. Of course, many of them are sort of dyed-in-the-wool curmudgeons. They're always upset. They always have a disdain for something. But I always tell people, listen, don't let your disdain for the Fed or the president's policies cloud your opinions on everything else in life. I'm talking from the stock market to the 4th of July. I like to separate my disdains, okay? I can disdain this and make money here. But there's a newsletter, and there's a whole bunch of them, but one called Profit Confidential, and they do point out that valuations right now are 76% above their 10-year average using, this is using a different PE ratio than I normally would use, but it is an interesting point that they make, and also at the same time, you can see how low interest rates are. They're at the lowest point possible. They say that is a very deadly combination. Again, I use a different PE in my methodology. Then, of course, there's the VIX, or what we call the fear index. It's a sort of a contrarian index. The more fearful we are, usually the more the stock market's going to go up. And then, of course, the flip side of that is when we don't have any fear, the pros get very excited. You can see just where we were on the VIX just about a few years ago. You can imagine around 2000. And finally, the engineering of gains, right? The stock buybacks, the accounting tricks, the lowered earnings estimates. I want you to take a look at this. This is really nuts, right? This is what Wall Street was looking for earnings in the first and second quarter of this year. This goes back, though. You go back to August, right? Wall Street thought the first quarter we were going to have earnings up 10.8%, and the second quarter 7.4%. Now they're looking for earnings to be down 3% this quarter and down 3.4% next quarter. This is nuts. So how do you have earnings going down and the stock market going up? All right, guys, let's talk about this because, listen, I know a lot of people make a lot of money selling books and gold coins and all of that kind of stuff, but when it comes to the market, there are some reasons to be cynical out there. You know, here's another thing. How do you explain this one? We got a chart up. You go back at the beginning of the year, Wall Street thought earnings for the first quarter were going to be $29.50 for the S&P 500. Now it's $27.31. Jim, how do we reconcile this?
Well, you have an economy that's doing okay. Valuations are okay. Cash flow is growing. There are very few other places to put your money. That's sort of why the market's been going up. When I look at what I worry about, it's the credit markets, that you've had so much money, so available, so cheaply, pushed from the banks to the unregulated, untransparent market. And I'm afraid that some people have gotten loans that don't deserve those loans. And if business business ever gets soft or rates go up, I'm afraid it's the credit markets that could back into the equity markets in the
Wouldn't
economy.
that be a shame? Because the people who didn't get that money on Main Street, a lot of our viewers would love to get a piece of that money. Of course, if you're buying a car, you might get it, but other than that, how do we reconcile this, Anthony? I know you're more of a macro, longer-term guy, but when you see earnings estimates coming down like this, and when you see all of the things that would say, from a pure valuation point of view, a stock or a market can't be worth what you think it is if they're not making the money you thought they were going to make.
Oh, I can build in every scenario over every decade a reason to run from stocks. And yet if you looked at a 50-year trend or a 75-year trend, the market's up 75% of the time, Charles. One of the reasons why I love coming on the show is you're trying to explain to the viewer to be a little less cynical and to believe in America and to believe in the corporate profitability and the corporate growth. That is your long-run ticket to compounding your family's wealth. And so I simply say, yeah, short-term stuff, you're right. Maybe we'll have less earnings. So what? The trajectory is there, and I do think we're about to embark upon a new investment cycle.
And there's nothing in the world better than powerful U.S. corporations. If you want to invest and compound your money, that's where you want to go.
I wish I had a tambourine, guys. I mean, I'm with you on this.
Look at what Buffett did over the last 50 years. Look at the bet that he made.
Well, look about the guy last week, the janitor. The guy was a janitor his whole life, a mechanic occasionally, and left $8 million investing in blue chip names. But still, our audience, a lot of people in America are very, very skeptical. So I do like to play devil's advocate. But Hillary, you deal with a lot of individuals, and you have to do a lot of hand-holding, right?
Right, and that's simply because the market is so volatile. But generally, it is about performance. But I do a lot of explaining. And in this particular market, in the dichotomy that you're talking about, Charles, the way to handle it is to look at individual stocks and realize, so energy has just been such a damper on earnings. So you take that out, and you see that there are areas that you have to
so you do a
rotate
little
in
bit
this
of
market.
homework. Matt,
Yes.
Anthony brought up the Fed earlier. You've talked about the Fed. A lot of people tell me they don't want to get involved in the market because the Fed is manipulating it. Yep. The Fed's not going anywhere. So are you saying you never want to be in the market?
No, and we were at the Money Show. Two people came up to me complaining about Obama, how bad things are, and the Fed a lot. And they've been missing out on one of the greatest rallies we've had in a very long time. But it's basically on their political views and their emotions because they'd like to feel reassured that, you know what, I'm right, Obama stinks. Meanwhile, they're mad at all of us for making money and being in the market. Push that aside and do that at the dinner table. Invest money in the market.
But I love, though, here that's happening, guys. You guys are saying it's not too late. I agree. I think this is a huge cycle, and there's a whole lot more money that can be made. This is just the beginning. Speaking of just the beginning, by the way, JetBlue, they announced just yesterday they're going to have new flights from Florida to Cuba. Now, we all know the economic benefits, but one of our panelists says that we need full diplomatic relationships with these guys right now for security reasons. We're going to break it all down for you next.
It's time for Upon Further Review.
So yesterday, JetBlue announced it's going to add charter flights between Tampa and Cuba. And, of course, more and more companies starting to sniff around. It's going to be a gold mine for a lot of them. But, you know, it would take more than President Obama's executive memo to get that kind of real big business action going. In the meantime, Cuba, they're already getting a lot of investments from a lot of countries around the world, including China. Between 2003 and 2011, China invested in the Caribbean $2.5 billion, and since then that number's probably doubled again, and the number one destination has been Cuba. Up to that point, $560 million. Now, Chinese ambitions in the region know really no bounds at this point. There are plans for one Chinese billionaire wants to build a $50 billion canal in Nicaragua. So upon further review, is there a sense of urgency for America to get into Cuba before it's too late? Anthony, you say yes.
I think it's a principal reason. It's one of the, look, I agree with the president on this. I think we have to be in Cuba. What you left out is that on the commercial side, not the government side, the Chinese are investing in the Bahamas, huge in the Bahamas. They got access to that airport there. And I think this is actually a geopolitical risk for the United States. And so the president is doing the right thing by getting into Cuba. You have to also remember with the decline in oil, Venezuela has been crippled. They can no longer feed the Cubans. And I was in Cuba in December of 2012. Charles, if you want to see a failed socialist experiment, go to Cuba. 54 years, 11 million people basically out of work.
Are you talking eventually connecting the dots to a redo of the Bay of Pigs kind of thing? In other words, Are we looking at a military existence in our right off our shores? Is that what we should be worried about?
I think what you have to understand about the Chinese, if you know their culture, they move slowly. They don't feel they need to go to war. They feel they're going to be able to buy it and acquire it. And if you look at the United States and the map of the United States, that's why all the money's going into the Caribbean.
But Jim, you were in Florida recently, and you met some people who feel the exact opposite.
Right. I was sitting next to a dinner partner whose father was in the Bay of Pigs and went and served 3 years in a Cuban jail. And they don't want relations until this regime is gone. But what they don't realize is if we open up and put money in there, not only will we beat the Chinese, but the people will not tolerate the regime. So not only do we want to prevent the Chinese from getting a strategic interest, we can beat their pants off economically because the Cuban people have so many relatives here, and you can do business, and they know the American culture. They get American TV.
It's the biggest
we will
gift.
win.
That's the biggest gift that we have is our ideals and our culture, and we need to export it to Cuba now so we can create that tipping point over the next.
Well, we
15
also
years.
have we also have a lot of infrastructure companies that could do a lot of good work there. It's like 1950s. I've spent time in Cuba, and it's just such an opportunity for the telecommunications, infrastructure, engineering. I really want to see us in there and have an opportunity also to build up on the tourism, of course. Our economy could really thrive off of that.
Yeah. Hillary, you know the joke in Cuba? The locals say, you know, we pretend to work and they pretend to pay us. And that's what it's like there.
Sounds like Fox Business. No, I'm just joking. You heard the stage manager. All right, guys. Hey, by the way, make sure you're watching Fox Business's new hit show, Strength
Bill,
and
that was
Heritage.
Matt that said that. It wasn't Charles.
Jamie Colby, she was here last night and electrified our set. She does it every night, Monday through Thursday, 9 p.m. right here on FBN. All right, up next, my favorite segment of the week is report card time. Hold my feet to the fire, especially this week, because me and the panel, we all rock. But we're going to talk about it. Should you hold these stocks, let them ride. You don't want to miss it. We got a lot more besides that. We'll be right back. All right, guys, my favorite part of this show, the week actually, no pain, no gain. It's when we take a look at the stocks that we've talked about that are in the news. So we don't try to cherry pick, but the ones that have made big news. Now, first up is Logmein. I've mentioned this more than once. Go back to July when we first started the show. I mentioned it again. It's up 24%. We've taken profits. We're not in it. Matt, I kind of remember you liking Logmein.
I do. I like Logmein a lot. I think that's one of those smaller name tech companies that you can ride. Nobody knows about it.
I own Logmein.
Do you really?
Yes. I've had it for over 2 years now.
It's so embarrassing because I tried to pronounce it all as one word. I thought it was like a ramen noodles or something. Log me in. We made money on it. You did too. You really made money in this one. Skechers, oh my goodness, exploded. Now, we talked about this more than once. The first time was in October, up 20%. Again, we've taken profits on it only because I've been a little worried with the way it reacts when it has bad news. They really hammer it. There's some kind of negative force in there, some shorters, I guess, but they're producing.
I got to tell you, though, I love the fundamentals in the stock. The chart's fantastic. This is one I would buy. I'd hold on to. I think it's got higher to go.
And I would also say that we're holding Under Armour and Nike, so I felt overloaded in the space. Do you know this one, Skechers?
Yes, I do. And we've talked about Skechers, and it seems just to march upwards, but I am a little wary sometimes of the shoe plate. Of the shoe
itself?
Yes,
okay.
the shoe plate.
I know management sort of has a mixed background, let's just put it that way. Finally, after the bell, Zillow, they just reported their earnings. I talked about it. They missed by 2 cents. Beat on the top line, though. It's up just slightly since I first had it on the show, but it's up big because they say it's truly a deal. It's going to happen next week, perhaps even on Tuesday. You know, we see some of these high flyers coming back, getting hot again.
I don't like this. This is one of the companies I stay away from. I know it's up big, but I'm staying away from this one.
Yeah, but it's in the same vein as a Yelp or you know, this is a hot area, and it's going to.
You know, here's the beauty. You know, whether people are buying a house, moving it to rent, I think people are going to be on the move. You know, and I just think they're going to do extraordinarily well. Maybe work their way into the, but I think it's going back to $130, $140 a share. All right, guys, it's your turn now. Hillary, you picked Owens Corning back in October. It's done pretty well. It's up only 23%. they reported this week,
right? They reported, and Owens Corning was very positive on guidance for 2015, insulation, roofing, and the foreign currency hit was only $20 million, and the fact that they were able to overcome any of that. And they say that they're very positive on housing, and OC is a great company to own.
We're seeing a lot of signs that housing could be on the cusp there. A lot of signs.
I like.
So
you know, I've been playing this housing since the show started. So I'm hoping for it to take off. All
right. Now, you also liked, speaking of what you liked Zoetis. Back in October, they reported this week. It was up. It was a little flat today, but you're still up 27%. My subscription subscribers. We're long this stock. I love it. You know, it's the day before Valentine's Day. We don't love anything more than we love our pets.
Yep. And this pharmaceuticals for your pets. I mean, if you look, the money's being spent on pets and even poultry and that type of stuff for our food. It's amazing the amount of money, be top line, be bottom line. A lot of new drugs going out. That's going to fuel the growth going forward.
Our pets. I mean, we love our pets.
Your kids are watching the show.
Well, they love the pets more than me.
Charles, he loves you too, guys. Just letting you know.
The kids stopped watching the show.
No, but we actually have more pets than people in the country, so that's usually a good place to have money.
Yeah, I know, and we do, man.
And I will tell you, we have 2 dogs. My wife has 2 dogs, and they cost money.
They do. Well, I have a dog that gets insulin shots twice a day.
Oh, wow.
Yeah, but we love them.
I hope you...
All right, guys, coming up, I've got a great investment idea for you. Anyone who has visited a hospital, you know, these guys are 50, 100 years behind the technology curve. Hillary talked about the technology curve. Go to a hospital. You'll be scared to death. I'll tell you a company that's going to fix it and make you a bunch of money in the process. We'll be right back.
This is just a kiss, a sigh is just a sigh. The fundamental things apply as time goes by.
All right, let's get down to it and help make you some money, guys. Here's an investment for you, Cerner Corp. Stock symbol CERN. The company provides a whole bunch of different services, extended care, medical devices, workplace health, but it's hospital and health systems. That's the enormous upside. I mean, come on. Have you ever been in a hospital that did not need massive technology upgrades? I'm talking this stuff is absolutely scary. Deaths from human systematic error. It's embarrassing in this day and age in America that this goes on. I think this country is going to really needs to step it up. Listen, we're talking about the only industry that's keeping the pagers alive, right? Now, in the fourth quarter, their bookings climbed to $1.1 billion. That was up 5%. But for the year, $4.25 billion, that's a record for them. Their margins, 22% from 10.5%. That's mind-boggling. The stock broke out technically back in December. I should have hopped on it then. Not too late. In fact, I love this thing long term, and it's even gaining more momentum. I'm looking at $100, and it's closed around 70. I think that's low, depending on how long you're really willing to hold it. It's not necessarily a great trading vehicle, but I love it for your 401k. All right, Matt, what do you think about Cerner?
You know, I've owned this one in the past. I've owned a couple of competitors. I think if you're looking at the macro picture like Anthony does, I think this is a niche sector that you can only see upside growth. They recently acquired Siemens Health Services, now expanding more overseas. I love that international exposure. So I think it can only go higher. A bit overvalued for me. Look for a pullback and jump in.
We love Cerner. We did sell Cerner this week, but we sold it just simply, and this is the problem with so many stocks. It's an excellent, wonderful stock, but we made our money, and sometimes we have to move on.
You like this space, though, right, Jim?
I like the healthcare space, and particularly technology and healthcare, to lower the cost and advance the state of the healthcare. And a lot is going on in private equity in that field.
I mean, this company is digitizing hospitals, and I mean, that's got to be a great growth industry. And I think the fundamentals they're not awful.
I mean, you go to some big name hospitals, some even in New York, and you're laying in a bed, and one nurse comes in with a clipboard, and they write everything down, and then her shift is over, and then the guy comes in, it's his shift, and he writes everything down, and you're like saying to yourself, you know, you don't know the blood type? You've been here for 3 weeks. Hey, guys, I got some good news for you, some interesting news. After the bell, all these hedge funds, they started to file what to have. I'm talking these masters of the universe. So we got Einhorn, interesting, lowered his position on Cigna, Aetna, and Apple, added to Sun Edison, which I'm long and I think is going to go to $30. And his new fresh buy is Time Warner. David Tepper, he completely cut out CVS, Alibaba, Citi, Facebook, Halliburton. I don't know, dumped some of these things. But speaking of where these big guys are putting their money, there's a new report out now that Governor Scott Walker drawing tons of cash from the Wall Street crowd. It's from the Wall Street Journal, and they specifically mention Anthony Scaramucci giving $100,000. All right, Anthony, so this is your guy. Tell us why.
It looks a little bit like Joe Friday from Dragnet, right?
Yeah, a little bit. Is that what you like, that old school honest look?
I like the old school honest look. I like the fact that he's able to take unpopular decisions that are beneficial to the populace, and he sold that in a blue state. And so this guy's going to win. He'll take the nomination, and I think he's going to be our next president.
We're talking about the 2 fights he had with the unions. We should all understand progressivism and unions were born out of Wisconsin. He won them big time. He faced them down, and he's a governor. I happen to love governors. I haven't made up my mind completely, but I'm leaning to Scott Walker,
Have
too.
you sat down one-on-one with him?
I have not. I
All
want
right,
to.
so we're going to go to the Hunt and Fish Club, you and me and him.
All right,
And
sounds
after we're
good.
done, I think you're going to have a great opinion.
Well, I'm already leaning toward him. I really admire him because he's baptism by fire.
Scott is a tough guy. Let me tell you something he has over the rest of the competition in the race. He's won 3 elections in 4 years.
Right.
He's ready for prime time. He is the Michael Phelps of this race. Those other people are untrained, unready for the fight, and I think he's going to bring it to him.
And he has a national donor base.
All right. Well, you get $100,000 from Anthony. That's a nice jump start. And you know, I will say though, don't discount the fact that a rookie can't be elected and make a lot of mistakes. Of course, I shouldn't be telling you that. Hey, guys, I just talked about some of these big moves after some of these big hedge fund guys. Does that sway you at all? You know, these guys selling CVS, starting to dump Apple. Does that scare you a little bit?
Look, it's always important to know what they're doing, and I find it just so fascinating. Everyone should pay attention. However, the returns have been so poor. Some of them have just been chasing and being whipsawed around, but it's important
Two of my
to
largest
look.
holdings are Apple and CVS. I'm sleeping well tonight.
I hear you, baby. Hey, a lot of tweets. We got to share some of them. You guys are on fire tonight, guys. Ann said on Twitter, Walker like Rubio as well. FNC Ladies Rule said, I like to see Governor Mike Huckabee in a Rubio ticket. Anyone else like that ticket?
No.
No. Hey, by the way, before we go, today's salute to an American success is Heather Post. At age 14, she left home, she dropped out of school, but you know what? Post eventually got her GED, and then in her 20s, she began a career in law enforcement. Well, after she retired, she began, not one, but 2 businesses. The first one was the Etiquette Seed. It focused on using different types of programs, teach children and teens etiquette. That's something that I think a lot of people could use. You got an adult version? Also, interpersonal skills, leadership skills, all the things you really need in society today. And Heather's other company, the Heather Post.